Hello everyone and welcome to ATFX Connect. New video, my name is Gonzalo Canete and this is the first video of the new year 2024. And as always, I'm here just to give you a quick, fresh update on equity markets, fixed income, commodity, currencies, and of course crypto assets, mainly Bitcoin. Very interesting week. Today's Thursday, and yeah, we have seen today the inflation rates from United States, also jobless claims. We're gonna go to that data in a few minutes, but mainly the first thing I would like to mention is the interesting and incredible results after the US Security Authorities SEC authorized or approves the 11 spot Bitcoin CTFs that it was published yesterday evening. Surprisingly, I'm evening from Europe. If you are in the United States, obviously it was yesterday during the day, during the evening. But surprisingly, I was sharing this chart with you on our ATFX Connect account because on Tuesday, apparently hackers took the control of the Twitter account of the SEC, of the Financial Authority in the United States, and published, falsely, that the authority approves the ETFs found on Bitcoin, which it wasn't true by then. A few hours later, they explained that the account was actually hacked. Even X was confirmed the account was not under the control of the SEC, of the authority. But the movement provoked by that speculation, the movement provoked by that situation, it was actually causing more volatility than the real announcement done yesterday evening. So as you can see here, what was the reaction of the market by the fake announcement and what was the reaction of the market by the true announcement. So most of the analysts consider that this because the price was already discounted, that move. But again, market is always wild environmental to trade on. Okay, now regarding the calendar, today we have seen the inflation rate from the United States, which it was surprisingly picking up again, which is been causing a movement on the let me find first the inflation rate here, 3.2. Let's refresh. It was causing actually a aggressive movement on dollar. As you can see here, it was the core inflation, it was 3.4. Sorry, the annualized inflation was 3.4. Core inflation 3.9 versus 3.8 expected. And monthly inflation, the one that is published month by month, it was 3.4 versus 3.2 expected, which is, again, a surprise for the market. Why? Because most of the members, officials from the Federal Reserve, respectively, they were making comments considering the inflation was not anymore a problem. Even Jerome Powell, the president, the head of governor of the Federal Reserve, was mentioned by the end of the year in 2023 that actually they were considering the option to cut interest rates next year. By March, even the speculation done by the market, it was highly probably that it will be the interest rates will be cut by March. And therefore, this movement, this change on the, let's say, on the direction of the evolution of the inflation, is actually suggesting that maybe the things are not going in the way they thought they are going, and the surprise effect was generated by the, let me check where is the, here we go, dollar index. So let's see the movement of the dollar index last couple of hours, and as you can see, it was jumping back to the top levels done through the last few days, trying to come back and recover 102.50 points more or less in the dollar index. It has been attacking that area. We also see let me share the full screen with you so you will see all in more details. Moving average of 55 crossing the moving average of 200, which is a bullish signal, and also the resistance, those levels. Let's go now to a more long-term chart. But as you can see, is generating what we could consider a bullish pattern via inverted shoulder head shoulder. And if by this data release today, dollar is actually conquering or crossing the 200 moving average on the 4 hours chart and going to the levels of in the area of 100, 103, 100, 250, 103. If we can see that the price is consolidating in this area, probably we can face a kind of attempt to complete the pattern and attack again 104.50 as a goal, as a target. As you can see, twice already has been generating this bullish pattern. Once it was here by the middle of December, was completely lost when Jerome Powell mentioned the option of cut interest rates, and now it's generating exactly the same pattern. My question, my friends, my question is this: how is possible that euro dollar is still rising, considering that the only economy in the world that is really working is United States economy, and the two alternative economies, the biggest blocks, is the euro area, Eurozone has a global economy, and also China. So in Eurozone we got official recession. The last numbers presented this week was showing again a decreased depression on the industrial production of Germany. And also if we take a look on China, still we are facing serious deflationary risk that the government of China is trying to avoid by this week. Also we have seen the last report from December of new fresh loans in China to private sector, which is increasing again. We have seen also how they're trying to flexibilize the credit on real estate businesses as a way to minimize or reduce the impact of that real estate over leverage and highly debts. So in this sense, in my eyes, the only option is United States economy, is the one who is growing, is the one who is showing good numbers and certain resistance. And my question is, how is possible in that scenario when the United States is the only economy that is working, dollar is not actually beating euro? Actually, what we can see in euro dollar is for the last month and a half, since November, how is rising. So something smells not really well here, because in my eyes, the economy that is in recession, the economy that is weaker, is the one which currency should be dropping against the economy that is making more money. Why? Simply because the flow of capital, the flow of money is moving in the direction of the economy that's generating more returns. In this case, the United States. So therefore, natural flow of the money and risk should go from the European Union to United States. Every single foreign investor should move the money from euro to dollar, and therefore the relation between euro dollar should be dropping, making the euro weaker and the dollar stronger, which is what is not happening for the last month and a half. And in my eyes, that's an anomaly. That's a unnatural situation that should be correct in the coming weeks during this year. Let's see if I'm wrong or not. So far, I'm gonna say goodbye now. I hope you like this content, you follow these videos, subscribe to the channel if you like it, and also contact me if you want to have you on my newsletter to send you freshly every morning, completely free, an email with the updates of the day, with the last news for the last 24 hours affecting the market. Also, I'm publish every single morning those bullet points related with equity, related with fixed income, related with currencies, commodities, and also cryptos on my blog at ATFX Connect, on the blog option Market Snacks. So again, contact me by email, just subscribe the channel, or even go to our website and check the last updates of market. And I will see you in the coming videos, updating as always about what is going on financial markets, and keep you in post. Take care. Thank you for watching. Bye bye.